Dire warnings about the new rules for energy producers, but the government says households and businesses can now expect cheaper electricity. A rough weekend for the housing market, and tens of thousands of Telstra customers have their unlisted information displayed. It's Monday, the 12th of December, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. Are you Christmas shopped out? Have you finished with the kids?
Yeah, there's a little bit to be done. It probably sounds a little bit panicked there. How about you? You've got obviously a lot of people to buy for.
Yeah, well, that's true. I was away for the weekend. I was up in Orange for the weekend, actually, which is where my mum lives. And we were downtown in Orange there, and I went shopping with mum, bought lots of stuff. It's good when you go with your parents because they actually sort of encourage you to spend money.
They're good for the economy.
That's right, exactly.
Now, Sean, it's actually worth mentioning we are coming up to Christmas, and there will be kind of new Fear and Greed episodes right the way through the Christmas period and New Year's and everything. So there'll always be something to listen to on Fear and Greed.
That's right. Make sure you have us downloaded so that every morning you can wake up and hear Michael or myself or a guest talking. Gosh. What a treat.
We're trying to entice people to subscribe, Sean, not turn them off. Anyway, we have plenty to discuss today. It's a big day. It's probably going to be another big week. I suspect I've said that pretty much every week so far this year. You've got a good chat coming up after the show with Elise Kennedy, who is the Vice President of Equity Research at Jarden. Elise is fantastic.
She sure is, and she's particular expertise is in technology stocks. And so we talk about what's going on in the local tech sector, from the really big ones, WiseTech Global, REA, through to some of the smaller stocks and new companies that she started following. Really fascinating chat, particularly for investors, because if you want to know anything about investing technology on the ASX, tune into this one.
Yeah, it is a cracker. That's coming up a little bit later on. But the main story this morning, Sean, the energy market is in uproar after the federal government announced plans to cap gas prices for the next 12 months, with some actually saying that the strategy is akin to nationalising the energy market.
Yes, while the Federal Treasury says the plan will ensure that wholesale gas markets deliver adequate supply at reasonable prices and on reasonable terms to domestic users, analysts warn that the price caps will destroy investment in the sector and in fact could eventually just lead to more blackouts. There are quite a few parts to this plan. Firstly, it's temporary. It will be removed after 12 months, though already people are worried that that won't happen. The energy package includes an immediate cap on contracted gas and coal prices and $1.5 billion in rebates to vulnerable Australians. Gas that's sold in the East Coast spot market or is uncontracted, that's the rest of the gas, will be subject to something called a reasonable price provision. It means producers can only charge a price based on the assessed cost of production plus a reasonable margin. It doesn't take into account the billions of dollars spent exploring and developing those gas resources. Now, the federal government also says it will use the $20 billion Rewiring the Nation Fund to support the Queensland government's clean energy plan and will work with the New South Wales government to compensate coal producers already locked into long-term contracts because the price they're allowed to charge is now lower. Energy Minister Chris Bowen yesterday said the package will save businesses from going bankrupt and bring down household gas prices, and gas companies had a social responsibility to give Australians a fair price for gas.
How do you reckon the gas companies feel about that, Sean? I can't imagine they're too happy.
No, not happy at all. It'll be interesting to see what their share prices do today. Keep an eye on Santos and Woodside, given that the announcement was made after trading closed on Friday. Their argument, the gas companies' argument, is that they spend billions of dollars developing gas resources, and capping prices means they just won't invest in the future in the industry because returns will be harmed. Now, we might not like coal or gas in terms of them being fossil fuel industries, but gas in particular is very important during the next 10, 20 years, during the transition period. And what the big companies are saying is, why should we invest in that if our returns are going to be capped? Investment bankers said the intervention was more draconian than expected because of that reasonable price provision, with a Credit Suisse analyst calling it a declaration of war on the East Coast gas industry. Analysts argue that less investment in the sector due to the strategy will ultimately lead to blackouts. Well, that makes sense too. The other side of the coin, the large manufacturers, the big users of gas, they're delighted. In fact, the Energy Users Association of Australia said it's a balanced approach to the energy crisis. So we certainly have two very clear sides on this one.
A declaration of war. That is one Credit Suisse analyst who knows how to create a headline, isn't it?
That's Claire O'Neill, our favourite politician in terms of headlines. She'd be proud of that one.
Oh, I suspect so. But now this still has to get through Parliament, and that's been recalled for Thursday this week. What are they all saying? What's the Coalition, the Greens and the crossbenchers in particular kind of saying?
Well, look, there's going to be plenty of negotiations in coming days. The Coalition has come out. It's highly critical of the deal. It won't vote for it. That's a bit of a given. Greens leader Adam Bandt says the government shouldn't be compensating greedy coal companies. So that package to help the New South Wales coal producers, he doesn't like that part of it. The Greens, he said, will oppose all compensation for coal companies affected by price caps. And they'll also push for a windfall tax on energy companies and seek larger subsidies to help households pay their power bills. Of course, that's somewhat of an ambit claim. That's their opening position, and they will negotiate. Senator David Pocock, whose vote is crucial, we've already seen that this Parliament, said the package doesn't address Australia's exposure to global energy market volatility, though he hasn't decided whether to support it or not. And Senator Pauline Hanson said she won't support the package, arguing it will have no impact on energy prices. It certainly is going to be the story of the week, Michael.
Oh, sure will. It is a massive story. Now, you've already said keep an eye on the gas companies today on the local market. How did the ASX finish on Friday?
Well, it finished up 0.5% to 7,213 points. Material stocks and tech companies fared best, while utilities, which otherwise had a pretty good week last week, fared worst. Now, among the large caps, BHP, Fortescue Metals and Rio Tinto all ended up close to 3% higher on the back of higher iron ore prices. Banks were mixed, so too the retailers. One sector last Friday, which was kind of interesting to watch, was the lithium miners. They're all under pressure. Really, they were all last week. Goldman Sachs late last week downgraded its forecast for the price of the metal. Companies like Alchem, Pilbara Minerals, Core Lithium, Liontown, they all went backwards on Friday.
And what's happening in global markets?
Wall Street fell by close to 1% over the weekend. That's all about a few things that are coming up. Inflation figures in the US are due out this week. The US Federal Reserve is meeting over the next couple of days. It'll make its pronouncement on interest rates. There's also concerns that the world's largest economy will end up in recession. Hence, that market is under pressure. Oil prices also remain under pressure, with Brent down below $77 a barrel. Good news at the Bowser, clearly. Don't think diesel prices are down much though, Michael.
No, they are not. I checked that yesterday, and I am unhappy to report that they are still substantially higher than petrol.
Yeah. Gold's trading around $1,800 an ounce, and the Aussie dollar is fetching almost 68 US cents.
So I've really got to be in my bonnet over this. I'm just going to relax and just ride my bike everywhere.
Well, it's probably better for you, better for the environment.
Yes, it's an e-bike, so it does have a little bit of a drain on the environment.
You don't have an e-bike, do you really?
Yes.
Ah.
Yeah, because we live in a very hilly area, and we bought them at the start of lockdowns. So they're a couple of years old now. And this is when the kids were smaller, so we had the child seats on the back, and we actually needed e-bikes to help us get up the hill. Anyway, we'll leave that one alone, and we'll come back in a moment with the rest of the day's business news. Sean, in Friday's chat, we were talking to Eliza Owen from CoreLogic, and she told us how it was going to be a really busy weekend in the mortgage market. 2,667 homes went up for auction, but it really wasn't such a good outcome for sellers.
No, the second last big weekend before the end of the year, and it wasn't a great one. The preliminary auction clearance rate across capital cities fell to 57.9%, according to CoreLogic. That's the worst in almost 5 months, and it's been quite a few months since it's been under 60%. It certainly suggests that interest rates are biting potential buyers who simply can't afford as much as they could at the beginning of the year. Of course, fewer sales means less pressure on prices, which is good for buyers. Now, if we break that down, this is actually domain data, so it's not quite apples and apples here, but almost $300 million worth of homes sold in Sydney over the weekend with a clearance rate of 60% from 726 auctions. Not bad. Around $314 million of property was sold in Melbourne, but that was from 1,000 auctions. Its clearance rate was 58%. Brisbane came in at 46%, Adelaide at 73%, and Canberra at 54%. So I think it's fair to say the housing market is finishing the year with a whimper.
Yes, I think that seems fair to say. Sean, how about this one? Thousands of Telstra customers have had their private details published online in error, and the company has blamed a misalignment of databases.
It isn't a cyber breach. That's probably good, but the processes at Telstra obviously leave a little to be desired. The names, phone numbers and addresses of more than 130,000 Telstra customers was wrongly made available online via the white pages and directory assistance sites. Telstra Chief Financial Officer Michael Ackland said there'd been a misalignment of databases used to provide the services, and the telco is undertaking an internal investigation to understand what happened. This actually isn't that uncommon an occurrence across the economy, not just Telstra, more generally. The latest data from the Australian Information Commissioner says that 63% of data breaches are malicious, cybercrime, 33%, a third of them, are human error.
Wow.
And 4% are system faults.
Oh, there you go. Now, Sean, it's almost the end of the year, but it seems like there's still a fair bit going on in Canberra. Things aren't actually slowing down that much.
No. Now, the energy package obviously will keep people jumping this week, and all the pollies have to return to Canberra. But there are other things going on. Foreign Minister Penny Wong and her opposition counterpart Simon Birmingham will together visit Vanuatu, the Federated States of Micronesia and Palau, as part of their shared commitment to working with Pacific partners. It's a nice show of bipartisanship there. And yesterday, Health Minister Mark Butler announced that the child dental benefits schedule, first introduced back in 2014, will be extended for another 4 years. It allows eligible children up to the age of 17 years access to more than $1,000 every year for 2 years in basic dental. That's a good little scheme, that one.
Yeah, it is a good scheme. Wouldn't it be great to be one of the staffers supporting Penny Wong and Simon Birmingham as they go to Vanuatu and all these lovely places around the Pacific? Nice time of year to be doing it.
And you want to be one of the really junior staffers?
Yes, I have very little responsibility.
Yeah.
And you probably have a bit more free time.
Yeah, exactly.
This is a career goal for me now. Sean, the Australian cricket team had a big victory over the West Indies yesterday, and off the field, US giant Paramount, which owns Network 10, has offered Australian cricket about $1.5 billion to secure the rights to test matches and the Big Bash League.
Yes, this has been going on for a couple of months now. That $1.5 billion is over 7 years. According to the Sydney Morning Herald, it's not quite a done deal, though, with Cricket Australia still talking to incumbent partners, Foxtel and Seven. Paramount and the sport are in the process of finalising a long-form contract, but Seven and Foxtel are still around the place. Now, Nine was also in talks. It just didn't come close to the dollar figures that Cricket Australia wants.
Sean, the Financial Review released its annual list of highest paid CEOs for 2022 on Friday, and coming in at number one for the second year in a row, earning $23.7 million, is Macquarie Group's Shomara Wickramaniyaka. But the big surprise was who came in at number two.
Yes, it was the newly installed CEO of the listed fashion jewellery place, Levisa Holdings. He was paid $20.9 million for just over 7 months' work.
Wow.
Ironically, Levisa currently faces a class action from former employees over allegations of underpayment. Its market cap is just $2.5 billion. CEO is getting $21 million. Now, Macquarie's market cap is $65 billion. That's a lot higher. Its CEO isn't getting much more. The next couple of positions were Mick Farrell from ResMed and Greg Goodman from Goodman Group. They're regularly at the top of these lists. Then at number 5 came Ruslan Kogan, who earned $15.2 million last year. Now, Kogan.com's share price has fallen 60% over the past year. I'm sure there are a few shareholders not real happy about that.
Yeah, I suspect you might be right there. Now, Sean, this one's very interesting for me. I find this fascinating because there are obviously plenty of do-it-yourself super funds out there. There's more than 500,000 of them. But the general rule of thumb in relation to all this has been that if you have $500,000 in super and you know how, running your own fund makes sense. But that advice has changed.
Yes. So the Australian Securities and Investments Commission has dumped guidance that self-managed super funds should have $500,000 to be competitive. The regulator doesn't say how much people should have, but the SMSF Association, which of course wants people to have SMSFs, reckons it could be as low as $200,000. The association said a recent study by the University of Adelaide shows no underperformance of SMSFs between $200,000 and $500,000. Now, that's all true, but my big piece of advice, and I have run my own DIY fund and decided to stop doing that, make sure you know what you're doing, number one, but also what you're getting yourself in for. It's not something that you can just do and then put in the drawer for 12 months and come back to. So running your own DIY fund isn't that easy when it comes to super, but that whole $500,000 guidance has been dropped.
It shows why the input from professionals and the advice of professionals is just so valuable in this kind of thing.
Absolutely.
Now, Sean, the federal court has found that BlueScope, which is Australia's largest steel company, and one of its former executives attempted to engage in cartel conduct and price fixing for 10 months in 2014.
Yes, the 453-page judgment handed down on Friday found that most of the Australian Competition and Consumer Commission's allegations relating to the supply of flat steel products were proven. The judgment found that BlueScope's former General Manager of Sales and Marketing, Jason Ellis, unsuccessfully attempted to induce 8 steel distributors locally and one overseas manufacturer to enter into agreements to either fix or raise the level of pricing. BlueScope said it's reviewing the finding. This could be a very expensive exercise for the steel company.
Yeah, sounds like it. And finally, Sean, the Star Entertainment Group's Brisbane and Gold Coast casinos will remain open under the supervision of a special manager, but will have to pay the Queensland government a fine of $100 million.
Yes, Queensland Attorney General Shannon Fentiman said the group's operations would be overseen by Nicholas Weeks. He's the same independent monitor overseeing the group's Sydney casino. Fentiman has given the Star 12 months to clean up its act, otherwise have its licence suspended for 90 days. She said there is an opportunity for Star to return to suitability, but it has a long way to go.
Moving on to overseas news now, an oil giant, ExxonMobil, has boosted its annual share buyback by 10% to $74 billion.
Now, that share buyback is worth more than the total value of Woodside Energy. It's just massive.
That really kind of puts it into perspective. That is huge.
Yeah, I mean, we think of Woodside as Australia's biggest oil and gas player. We think of it as a global player. Well, their share buyback is bigger than Woodside. Now, 6 weeks ago, the US-based company announced its biggest profit on the back of sky-high energy prices. It's got so much money, it really doesn't know what to do. So let's buy back shares. ExxonMobil's share price is up more than 70% this year. The company itself is worth $430 billion US dollars. That's about 2.5 times the size of BHP.
Yeah, that is massive, isn't it? Finally, Sean, US competition regulators want to block one of the biggest deals of the year, Microsoft's $75 billion US bid for video game maker Activision Blizzard.
The US Federal Trade Commission reckons the purchase will lessen competition in the cloud gaming business. The Activision deal would be Microsoft's biggest ever acquisition. That's saying something. It would make it the third largest gaming company behind China's Tencent and Japan's Sony.
Okay, up next is the Fear and Greed Daily interview. We mentioned it at the top of the show. Elise Kennedy, Vice President of Equity Research at Jarden, is your guest today.
Yep, all about tech stocks listed on the ASX. If you're interested in buying or selling, just interested in investing generally, listen to Elise. She has a great knack for putting into plain English why she likes or doesn't like certain companies.
Yeah, it's a good one. It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And we also have the new episode of Fear and Greed the week ahead featuring resident economist Stephen Koukoulas.
Yes, he sort of got over the excitement of last week with Reserve Bank interest rate rises and GDP figures. We talk a bit about that. But then we get into this week. The big one, of course, is labour force. Can the employment market just keep charging ahead as it seems to have done for quite a few months now? We talked to Stephen all about that.
Yeah, plenty of good listening. Thank you very much, Sean.
Thank you, Michael.
It's Monday, the 12th of December, 2022. Make sure you're following the podcast and join us online as well on LinkedIn, Instagram, Twitter, or Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.